You're listening to the Trading Through Coronavirus podcast with me, Nigel Barker, brought to you from Business West. Now, coronavirus itself is having huge implications to our own region, to the wider UK as a whole, but also globally. As we all know, this is a global pandemic. And this is going to have some implications moving further down the line. I'm joined actually now by Kerry Stagg, who heads up our research team here at Business West. And she's been looking into some of the forecasts for the global economic growth for the next 12 months. Kerry, just give us a quick headlines of what you found so far.
Yeah, okay. So we've researched across a number of sources and looking at sort of forecasts for global economic growth. And you can imagine they're quite variable, but none of them, unfortunately, painting a particularly positive scenario. So, for example, Euromonitor, one of our key data providers, their best case scenario is around minus 1.5% to a plus 0.5% growth over the course of 2020. We've got the likes of Capital Economics predicting minus 3.3%. Globally, and the World Economic Forum a little bit more positive at around sort of 0 to 2%. It's worth noting that the pre-virus predictions were around 3% global economic growth. Bearing in mind that that's already against the backdrop of geopolitical uncertainties in the Middle East, trade war, worsening business and consumer confidence, and slowing industrial production. And we've also got quite a lot of the sort of, economic stimulus measures, the fiscal measures in place, such as low interest rates, are still kind of there as a hangover from the financial crisis of 2007 to 2009. So, there's not much further you can kind of go with some of those things. What's going to happen is that we're looking at a very sharp economic downturn in quarter one and quarter two, potentially recovery from quarter three onwards, but it could be that more realistically that's going to happen early 2021, and obviously that depends on the length of the time that we're locked down. It depends on the containment of the virus, and on the strengthening of global healthcare systems.
Do we have any indication at the moment what sectors might fare slightly better? I suppose tech is always a big one that people have always said recession-proof, but
yeah, so things like entertainment, streaming services, those kind of areas are looking good. Obviously, the food sector and healthcare, things that people can do to take care of themselves, like vitamins, probiotics, those sorts of areas, could well do very well. Anything that gives us, entertainment at home, things to do, ways to look after ourselves, those kind of areas, for sure.
So, Kerry, is there any indication yet as to how companies need to structure their business or look at their supply chain in the future?
Yeah, sure. I mean, this crisis has really made it clear how intertwined and fragile global supply chains are. And that's really been as a result of a drive for lower labour costs and transportation costs. So in the future, the supply chains need to take into consideration not only traditional metrics such as cost, quality and delivery, but also, and you'll like this, Nigel, the 3 R's. So resilience, responsiveness, and reconfigurability. And these are not new metrics, but obviously their importance is going to grow in the face of future uncertainty, and having seen how vulnerable supply chains are. So that's going to mean that products and services in the short term will cost more, but longer term risks can be mitigated. And as well as future pandemics, and let's hope there aren't any future pandemics, climate change is one such future risk that transcends all borders and will disrupt global supply chains. And maybe this is an opportunity to look at those supply chains and help to alleviate that inevitable disruption in the future. In terms of what companies can do, we know at the moment there's a lack of transparency in supply chains, so it makes it much harder to make some of these changes. But if companies do find themselves with some downtime, and I know that's not the case for everybody, they can investigate this and look at alternatives. They can look at building flexibility into their supply chain, so they're not reliant on just one or two partners, but sort of spread that risk. There's a need for greater digitisation of supply chains. So a lot of companies still rely on wet signatures and paper printouts. And that kind of digitisation would really help with traceability and transparency. And that would also allow for things like the building of predictive models to enable corporate decision makers to plan for future disruptive scenarios. So there's a need there for sort of technological solutions to better prepare supply chains for the future. Of course, companies can look at the alternative production capability. Is there something that is in demand, be it from a healthcare point of view or a consumer point of view, that they could turn their attention to. And a lot of the healthcare needs in terms of PPE and medical equipment, etc., have been sort of well documented and talked about. But I think we can look at this from a consumer demand point of view, and maybe that's something that we can cover next time when we talk again.
Thank you very much indeed for your time on that one, Kerry. A lot of work's gone into that, so thanks to you and your team for pulling all that together. Don't forget to subscribe to this podcast through your usual channels, or follow the hashtag Trading Through Coronavirus, and the website is www.tradingthroughcoronavirus.co.uk. See you soon.